The average annual GDP growth over the last 3 years is 8.3%. For the current year also, that is 24-25, we have given a projection of 7.2%.
This is going to be one of the best possible year as far as the economic growth of the economy is concerned. The growth is a function of how the GDP or the macro will look like. And our expectation is that the macro growth should be somewhere in the range of 7.5 to about 8.
The early warning group is monitoring that. SEBI and the Reserve Bank together, we are monitoring that. In fact, currently the options and futures, the volumes are pretty large. It's perhaps larger than the nominal GDP of the country. So we have discussed these matters with SEBI. SEBI, I think, has taken a few measures, and they are examining it. You see, we are watching the developments in all segments of the credit market. Last year in November, we took certain action against unsecured loans, not against unsecured loans, but in that particular sector. Unsecured loans, then things like bank lending to NBFCs.
Systemically, there is no issue. Individually, yes, people may actually do things, and that's why some of the riskiest instruments like derivatives, small investors should stay away. And they should be kept away so that it doesn't bring basically a situation where small investors can get hurt.
The next 15 years will have to be driven by earnings growth rather than continued multiple expansions. The conditions for future earnings growth is dramatically different. One of my pet theories is terminal value investing. And instead of applying that to a company, if we are to apply that to India and say what is the terminal value of India, then I think one comes up with very interesting possibilities. Okay, our manufacturing potential, or the per capita income changing, or financial deepening in the economy. I think we are getting to a point where the confluence of all of these factors is giving us the outcomes which we have not earlier imagined. So I would say that India is an idea whose time has come.
This center point of the country will pass through financials. And it's not just the banks, the wealth management companies, the mutual funds, the stock markets. Enough range of things to play there. Historically, each time the government vacated a sector, the profit pool came to private sector, and they tended to be natural oligopolies. So it's happened already in telecoms. They vacated telecoms, they vacated airlines, and so on, like they did in the past with banking, or they did with media, and so on and so forth. So all that is also still coming. And the whole policy push is manufacturing. We want to go from whatever 16% of GDP to 25%. So you can expect all the policies to come directionally in favor of whether you're doing semiconductors, your PLI will come for semiconductors, electronics, pharmaceuticals, chemicals.